we are kicking things off with massive shifts in the world of commerce. Amazon is making a huge move, expanding its logistics arm to outside companies. We are talking about American Eagle Outfitters and Procter & Gamble, now integrating Amazon's proven infrastructure and intelligence to handle their fulfillment and shipping needs. This expansion is sending shockwaves through the industry, causing major reactions in the stock markets as we dive into what this means for global trade.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at how logistics providers are fighting to adapt in this new climate. Victory Logistics is aggressively expanding its technology-enabled solutions under the leadership of CEO Tyler Safiantino. They are integrating real-time data visibility and multimodal optimization to give businesses the control and transparency they desperately need as supply chains face massive cost pressures and disruption. Find out how Victory Logistics is turning logistics into a strategic advantage. The financial landscape is heating up as we turn to major players. Pangea Logistics Solutions is set to release its first quarter 2026 results and host a crucial conference call to review their performance. We will be breaking down exactly what the company reported in their Q1 results and what investors need to know heading into that important Q&A session. And finally, we look at the broader market impact. As WTI crude jumps and concerns about the Strait of Hormuz rise, stocks are reacting wildly, and Covenant Logistics is seeing significant volatility. We will analyze why this move is happening and what this tells us about the current state of freight and logistics investment. Stay with us because this is the market you need to watch. Amazon is significantly expanding its logistics capabilities by offering its supply chain services to companies outside its direct sales ecosystem. Through Amazon Supply Chain Services, the online giant will broaden its existing portfolio of freight, distribution, fulfillment, and parcel shipping solutions. Major corporations, including American Eagle Outfitters and Procter & Gamble, have already signed agreements to utilize these services. Peter Larson, vice president of the service, stated that Amazon is extending the infrastructure, intelligence, and scale of its supply chain services, honed over decades, to businesses across various sectors, drawing a parallel to the growth of Amazon Web Services in cloud computing. The services are designed to support vendors selling products through Amazon's platform. This strategic shift has already created ripples in the competitive landscape, impacting rivals. Following the announcement, shares of FedEx dropped by 9.1% on Monday, and UPS fell by over 10%, while Amazon's stock saw a modest rise of 1.4%. Amazon's logistics dominance is substantial. According to the Pitney Bowes Parcel Shipping Index for 2024, Amazon managed over 6 billion parcels, placing it second only to the Postal Service in the United States. Furthermore, Amazon generated more than $31 billion in parcel revenue that year. The company leverages a vast network, including more than 200 fulfillment centers across the U.S., a fleet exceeding 80,000 trailers, and 100 aircraft operated via partnerships. This scale contrasts with the Postal Service, which handled just under 7 billion parcels. This expansion follows a successful model similar to the initial rollout of Amazon Web Services, which stemmed from the retail giant's technology infrastructure and accounted for 30% of the global cloud computing industry last year, according to Synergy Research. However, this reliance on a single infrastructure has exposed vulnerabilities, as demonstrated by a past outage in Amazon's cloud network that temporarily disabled hundreds of services. Current corporate partnerships highlight the breadth of adoption. Lands' End is collaborating with Amazon's network for order fulfillment. American Eagle is using the service for online deliveries, and Procter & Gamble will utilize it for shipping raw goods. Additionally, 3M, a manufacturer of chemical and Scotch tape, is already employing Amazon's freight services to move items from its manufacturing sites to distribution centers globally. Victory Logistics is aggressively expanding its technology-enabled logistics solutions to address the evolving complexities of global supply chains, driven by rising costs, technological disruption, and shifting trade dynamics. In a recent announcement, Victory Logistics detailed a strategic pivot towards integrating advanced logistics technology, real-time data visibility, and multimodal optimization across its end-to-end supply chain offerings. Tyler Safiantino, president and CEO of Victory Logistics, emphasized the necessity for modern logistics systems. Supply chains today require a completely different level of visibility and coordination than they did even a few years ago, Safiantino stated, stressing that businesses need systems capable of providing insight, flexibility, and real-time adaptability. The expansion focuses on leveraging technology to enhance client control and cost efficiency. Victory Logistics is strengthening its capabilities in real-time tracking, data-driven routing optimization, and enhanced supply chain visibility for its North American operations, which currently support over 2,000 asset-based units alongside an expanding international freight network. A core element of the new strategy involves using data analytics and integrated logistics systems to pinpoint inefficiencies, optimize transportation modes, and significantly reduce overall logistics expenses without sacrificing performance. Furthermore, the company is intensifying efforts in international shipping and tariff optimization. Recognizing the impact of regulatory complexities, Victory Logistics is providing clients with strategies to minimize landed costs and bolster supply chain resilience in the face of global trade hurdles. Safiantino highlighted the fundamental shift required in industry thinking. The companies that are succeeding right now are the ones using logistics as a strategic function, not just an operational one. Technology plays a critical role in making that shift possible. Victory Logistics operates on a partnership model, working closely with clients to build integrated systems aligned with broader business goals, moving beyond isolated service provision. By combining operational execution with strategic insight, Victory Logistics is positioning itself at the forefront of the industry transformation, one where logistics is defined as an enabler of smarter, more resilient business operations. Pangaea Logistics Solutions is set to unveil its first quarter 2026 financial results on Monday, May 11, 2026, followed by a conference call on Tuesday, May 12, 2026, at 8:00 a.m. ET. The company, a global provider of comprehensive maritime logistics solutions, will present its performance and host a question-and-answer session for investors. Presentation materials will be made available concurrently with the company's SEC filing and in the investor relations section of the Pangaea website at https://www.pangeals.com/investors/ with a replay option available through May 19, 2026. The conference call can be joined via domestic lines at 1-833-1619-83 or international lines at 1-785-838-9310, using conference ID PANLQ126. Replay access is available through the domestic line 1-800-930-82241 and the international line 1-4022-2011-21. Pangaea Logistics Solutions specializes in providing logistics services to industrial customers, focusing on the transportation of a diverse range of dry bulk cargoes, including grains, pig iron, hot briquetted iron, bauxite, alumina, cement clinker, dolomite, and limestone. The company's core services encompass cargo loading, discharge, vessel chartering, and voyage planning. Noi Dung Kai Tight. Stock market volatility was evident in the afternoon session as several stocks, including Hub Group and Covenant Logistics, experienced declines following significant movements in crude oil prices. WTI crude jumped 3% to exceed $105 per barrel, and Brent crude surged 5% to over $114, driven by the UAE's interception of Iranian missiles and escalating concerns surrounding the Strait of Hormuz. And these geopolitical events immediately impacted the logistics sector, as fuel costs represent the single largest variable expense for trucking, rail, and parcel operators. The sharp rise in oil prices immediately compressed operating margins unless carriers could rapidly pass on fuel surcharges, a challenge compounded by a softening freight environment. And adding to the pressure, reports indicated that jet fuel was trading near $4.56 per gallon, nearly doubling pre-war levels, with analysts warning of potential rationing in Asia and Europe. This created a dual challenge for the global logistics chain, a severe cost shock combined with complex routing issues. And market analysts suggest that while the market often overreacts to news, significant price drops can present opportunities for investors to acquire high-quality stocks. And Covenant Logistics, CVLG, was among the stocks affected. The company has historically shown volatility, with its shares experiencing 10 moves greater than 5% over the past year. Today's movement suggests the market views the news as meaningful, but not fundamentally altering its long-term assessment of the business. And prior to this, Covenant Logistics had seen a positive reaction 10 days earlier after reporting mixed first quarter 2026 financial results. The company reported sales of $307.2 million, marking a 14% year-over-year increase and surpassing Wall Street forecasts. Adjusted earnings per share, EPS, of 26 cents also beat expectations, despite a decrease from the 32 cents reported in the previous year's quarter. Investors focused heavily on the strong top-line performance, which supported the stock despite the mixed bottom-line figures. And despite a 41.8% gain since the start of the year, Covenant Logistics is currently trading at $31.62 per share, remaining 9.6% below its 52-week high of $34.99 from April 2026. This highlights the continuing investment potential for long-term holders. And separately, the report highlighted the growing importance of specialized infrastructure in the artificial intelligence sector. It noted that the components necessary for AI servers, such as high-speed cables, power connectors, and thermal sensors, are largely supplied by a single company that maintains a monopoly, positioning this stock as a key, yet currently understated, player in the burgeoning AI boom.